Hello! We're excited to present our detailed technical analysis of Myriad Genetics stock based exclusively on the provided data. Let's begin with the general overview and trend.
Myriad Genetics has experienced significant volatility over the past 3 months, with a clear shift in trend direction. The stock began June at $4.24 and reached $6.37 by late August, marking a substantial recovery of approximately 50%. However, this movement occurred in 2 distinct phases: a bearish phase through July where prices fell to a low of $3.76 on August 1, followed by a powerful bullish reversal starting August 6th. The current short-term trend is strongly upward, but the stock remains well below long-term moving averages, indicating the broader downtrend is still intact.
Now let's examine the price and volume dynamics that accompany these movements.
Volume analysis reveals crucial insights into the price movements. Average daily volume typically ranges between 1.5 and 2 million shares, but August 6th witnessed an extraordinary spike to 15.6 million shares, nearly 10 times the norm. This abnormal volume coincided with the massive price jump from $3.87 to $5.67, suggesting either significant institutional accumulation or a major news catalyst. In recent sessions, volume has been declining despite rising prices, indicating weakening buying pressure.
Moving on to the moving averages, both EMA and SMA indicators provide important context.
The moving averages present a clear picture of the current market structure. Short-term averages are positioned below the current price, confirming bullish momentum. The 5-day SMA stands at $6.04 and the 5-day EMA at $6.11, both below the last close of $6.37. Medium-term averages also support the uptrend, with the 20-day SMA at $5.72 and 20-day EMA at $5.70. However, long-term averages remain significantly above current levels, highlighting the persistent bearish context. The 200-day SMA is at $9.19, and the 200-day EMA at $9.31.
Let's break down the technical indicators by their functional groups to understand the complete picture.
Momentum indicators show mixed signals, with bullish dominance but growing caution. The MACD at 0.30 with a rising histogram confirms strengthening upward momentum, while the RSI at 66 approaches overbought territory. The Williams %R at -14 and stochastic oscillators indicate overbought conditions, particularly in shorter timeframes. The CCI at 106.56 reinforces bullish momentum, but the money flow index at 33.82 diverges negatively, suggesting weakening underlying buying pressure despite price gains. Trend indicators are uniformly bullish, with the ADX at 31.06 signaling a strong trend, while the Arun up at 100 and Arun down at 20 confirm robust upward momentum.
Now let's analyze the linear regression to understand the price trajectory.
Linear regression analysis reveals a steep upward trajectory over the past month. The regression line originating from the August 6th low of $3.87 has established a consistent upward slope, with current price trading above this trend line. The steep angle of ascent indicates strong momentum but also increased vulnerability to corrections. The regression channel shows upper resistance near $6.60 and lower support around $6. Current price at $6.37 sits comfortably within this channel, but approaches the upper boundary, suggesting potential consolidation or pullback in the near term.
Based on this analysis, what can we expect for the next trading day's opening?
Based on the strong close at $6.37 and prevailing technical conditions, the next trading day is likely to open with a modest gap up. The combination of positive momentum indicators and the recent breakout above key short-term moving averages supports this expectation. However, given the overbought readings in several oscillators and the proximity to significant resistance levels, the opening gap may be limited. A range between $6.40 and $6.45 appears reasonable for the opening price, with potential for early volatility as traders react to the extended technical position.
Let's examine the resistance and support levels and how they might influence intraday movements.
Current price at $6.37 faces immediate resistance at $6.56, August 29th high, just 0.19 cents away. A secondary resistance exists at the 100-day EMA level of $6.38, only 0.01 cents above current price. Beyond these, the $7 psychological level and Bollinger Band upper limit at $7.01 represent major resistance zones. On the support side, the nearest level is $6.20, August 28th low, positioned 0.17 cents below current price, followed by $5.93, August 27th close, and $5.71, August 18th low. Given the close proximity to resistance versus support, intraday movement is likely to feature tests of the $6.56 resistance level.
What does the ATR 14 value tell us about potential intraday price ranges?
The 14-day average true range stands at 0.33, providing a framework for intraday price expectations. Applying this to the current price of $6.37, the potential intraday high calculates to $6.70, while the potential low projects to $6.04. However, given the strong upward momentum and recent volatility, the actual range may extend beyond these theoretical levels. In a bullish scenario, the high could approach $6.75, while a bearish reversal might see lows near $6. The ATR value of 0.33 indicates moderate volatility, suggesting significant intraday swings are probable, particularly around key resistance and support levels.
Considering all these factors, what are the possible scenarios we should anticipate?
3 primary scenarios emerge for the coming sessions. The bullish scenario involves a breakout above $6.56 resistance, potentially targeting $7 with momentum accelerating toward the Bollinger Band upper limit. This would require sustained volume and confirmation from momentum indicators. The neutral scenario suggests consolidation between $6.20 and $6.56 as the market digests recent gains and overbought conditions ease. The bearish scenario envisions a failure at resistance triggering a decline towards $6.20 support, with potential extension to $5.93 if selling pressure intensifies. The probability currently favors the bullish scenario due to strong trend momentum, but overbought conditions increase the risk of the neutral or bearish outcomes developing.
Finally, what conclusions can we draw from this comprehensive technical analysis?
Myriad Genetics presents a compelling technical landscape characterized by a powerful short-term recovery within a broader long-term downtrend. The stock has demonstrated exceptional strength since August 6th, overcoming key moving averages and resistance levels. However, current technical conditions suggest increasing vulnerability to a correction. The proximity to significant resistance at $6.56, combined with overbought momentum indicators and weakening volume, raise caution flags. While the immediate trend remains bullish, traders should watch for signs of exhaustion around current levels. A sustained move above $6.56 would open the door to further gains towards $7, while failure could prompt a healthy consolidation or deeper pullback.